Roger, have you ever worked with somebody who procrastinated and found that they had an issue approaching to year 10?
In our practice, no. And a lot of our job is to help people understand the trade-offs. So I actually don't care if they delay till 10 year and have a big tax bomb, as we described it, as long as they understand the trade-offs to that decision and it's what they want and it doesn't blow up their plan. My job is to help them understand the trade-offs of decisions so they can get to their judgment call and then tell them what I think is the best option given the totality of the situation. So the key is it's okay to suffer as long as you do it proactively and you don't just make an unforced error because you ignored it or you were so afraid of paying taxes and you didn't understand the trade-offs that you were going to have. So I think it's about that intentional decision-making at the end of the day.
Generally, it's better to spread it out across the 10 years, right? But you're paying attention to your marginal tax rate?
Well, yeah, it's better. Well, better is subjective in that it depends on the source of their income and what their income looks like now, whether they have lumpy years of income. Let's say somebody is fully commission-based, or they do a career transition where they have abnormally low income in a year, then you might accelerate and not do it on a systematic basis. But I think if you want to avoid unforced errors and you're not too concerned about optimization because the numbers aren't large enough or the severity of the extra tax isn't large enough, I do think it's very helpful to have a default rule. Let's say that you do it systematically over 10 years, but then you put eyes on it for those opportunities that might have you accelerated or decrease in any one particular year. But I think having that default rule of how you're going to do it takes away a lot of the ambiguity and allows you to avoid not doing anything.
Sean, what are your thoughts?
Yeah, Andy, credit to you for picking this topic because we really still are in the wild west of inherited IRAs and the 10-year rule for a number of reasons. One, we're now having the first generation that really had these deferred plans at work and at home starting to pass away, right? Recall the traditional IRA came in 1975, traditional 401k came in 1980, and really, both of those didn't get that much momentum until later on. So we're having the first generation where this is the big wealth transfer in these traditional retirement accounts. And two, even the 10-year rule itself is not 10 years old. So folks still don't really know about it. And like Denise said, the IRS fiddled around and changed the RMD rule or the not RMD rule. And, I'll just mention one thing about maybe strategic or tactical distributions in this regard. So maybe you inherit $1 million traditional IRA and you say, you know what that's going to do? That's going to accelerate my retirement path. I was originally going to retire in 5, 6, 10 years, but now I'm going to retire, say, in 3 years. So maybe the play is for the first 3 years, while you're still working, you're at your highest income, you take the RMD and no more. And then in those back 7 years, you chunk it out so that you sort of manage for the 10-year issue. So it really sort of depends on where you are. But I think this is just an area that needs a lot more attention and focus because the wave is coming, right? The baby boomers, people pass. And like I said earlier, nobody went to school to figure out how to inherit an IRA. And even if they did, the 10-year rule is not itself 10 years old.
Sign me up for the inherited IRA class 101. Denise, is there any flexibility if someone accidentally misses that final deadline?
Well, if you miss the deadline, then you have an RMD shortfall. You owe the IRS a 25% excise tax. It used to be 50%. And I say to people, if you find that you owe the IRS this excise tax, ask for a waiver. They have provisions for that. Look at IRS Form 5329. Follow the instructions. Don't just up and pay the excise tax because you think, oh, I owe the IRS. Because according to the IRS, if you miss the deadline due to reasonable cause, then they will waive the excise tax. So look at the circumstances. Were you sick? Was there some kind of natural disaster? Something. What made you miss the deadline? And then you take the RMD or take steps to take it, follow the procedures, ask the IRS for a waiver. And in my experience, the IRS has never told any one of my clients no. So for now, it's looking good.
Yeah, Andy, and I can concur with that. I've had 3 instances of helping someone navigate to a waiver, and Denise is exactly right. And you don't necessarily have to have a cause of I was sick or out of the country. You wouldn't say it in these terms, but I mean, a lot of times you're just a ding dong and you forgot, but as long as you phrase it correctly, I've always seen it approved.
But don't say that at the IRS here.
No, don't say that to the IRS, but you have to
me and you.
wordsmith it.
Yeah, the ding dong waiver is between the lines.
There is some grace, though. There is some grace.
I think I've had one client who it was not an inherited IRA, but she had passed the age where she needed to start taking her RMD and just forgotten, and it slipped through the cracks on our end. But we took it immediately, sent a letter to the to the IRS, and that all got sorted out pretty smoothly. Let's move on to segment 2.